This is London with Bitcoin Spike and VIP Trader looking for the open in terms of the markets. New York for Tesla. Looks like we've got some action to work with, as well as NVDA. NVIDIA looks like she is down. Tesla pre-open up. Nice to see. We'll be playing in a hand with Bitcoin currently hitting that 15 moving average with that 30. And I'm going to say 15 minute 20 moving average with the specific 30-minute time frame is going to be that 20 below. A lot of action on that 20 moving average, potentially below as we look at Bitcoin in terms of the New York Open. Now we have opened again up right into the specific and on the 30-minute short cap line. Beautiful. If you can see it in action, the 30-minute on Tesla, this was a level of interest established and has been for a while. The orders were waiting. Nice to see it engage. What's the cap line? Please be advised, former hedge fund owner, private, non-SEC, not financial advice. The cap line is a visual representation of RSI stochastic and MACD. Boom. So this was the level in terms of the open. Nice to see it engage. One of those flash trades. Boom, boom. You may say, how can I catch a trade for 0.5% and walk away for the day? I would tell you there are people who do nothing but that. Absolutely nothing but that. What do? We zoom out. We look at the overall patterns in play. We do, without a doubt, guys. We approach the whole trade day, but you know me. I like to approach the quick in, the quick out, etc. I love flash trading, almost high frequency trading if possible at a human level. Let's do it. Let's get in with a maximum amount of cash, tight stop losses, pre-designate our specific targets like on NVIDIA. What picked up on NVIDIA? We've got the specific, okay, lower pro line has picked up for about an equivalent now, 0.5% in terms of that pickup on NVIDIA, trailing a bit Tesla, which engaged on that specific short line, the MACD stochastic and RSI. That is a visual representation, that cap line. Okay, so we had NVIDIA down. We had on that 30-minute instead of that hourly, we had NVIDIA down, correct. Instead of, we'll look at Tesla, which opened up and popped into a short line. We had the reverse here, true. And just take a look at the specific Bollinger Band. Nice move on the hourly. We discuss this frequently. So expectations were paid on NVIDIA with a short down and below to target on the Bollinger Band, which you'll see is just flexing ever so much. Not much, but a little bit of flex in that calculative as we're watching this live. So key consideration level, the specific, pardon me guys, the specific and CPI, shout out to all the trade guys, all the traders who traded CPI. We did in the back. Let's take a look again at Tesla and see where we are at. Nice moves after the flash open. In terms of a micro short, let's look at what is engaging right now in Tesla. And you can say the following, the critique in terms of this strategy. Please listen up and shout out and good morning to all of our VIP, local and abroad. I hope you're doing well. Now listen, you can absolutely state, and I know Bitcoin has been hot. Bitcoin's been hot. What did we catch? The lower daily pro line. Now listen, you can take a swing or a punch at a strategy. You just can, okay? Unless the specific dynamics in play catch the specific low exactly, and it offers you a position like on Bitcoin to participate in 6% of price action. When the rest of the market is just looking down, it's providing targets for you to literally receive a phone call or an alert on TradingView and recognize, yes, we have a target in play. Beautifully well done. And I'll say this, the other critique, I'm making them. I don't need you guys to make them, but as I would make them, you would say, well, there are just too many levels. There's too much going on in terms of technically, there's just too much going on. What is the solution for that? Not all of the levels are engaged all of the time. That is the trick to an open. That's why I literally like at 3 minutes in to make an assessment. Is this a day to go forward and aggressively trade into the day? Let's look at the 15-minute on Bitcoin. Nice hit down into the specific. Did we mention this? Yes, I believe we just did. So what was the point here on the 15-minute as Bitcoin was traversing into that 15-minute? We noted this, and we were noting the specific action on the lower pro and that 20 moving average on the 15-minute for Bitcoin. I'm going to say this. As you're looking at levels to engage, Not all of your time frames are engaging at the same time. This is the monthly, so is too much going on? Sure. The monthly's less relevant immediately. The daily, how many alerts have come through on the daily, with what frequency? It normally takes a number of days for this time frame right here to become active, to activate. The 8 hourly on Bitcoin, about the same, guys. It's less, with less frequency that there's a level of activation. Pay attention to this 20 moving average. To say that this on the 8 hourly or the cap line is irrelevant, you'd have to be on another planet, guys. You'd literally have to be on another planet. So the critique would be, well, there's too much going on. I can't assess it quickly enough. I'm not prepared. This is going to be the solution to the critique. And I want you to internalize this and understand it, that a valid critique would be for someone who's not experienced in the market, and you all are, is that, well, the specific levels, there are too many levels involved. Of course, something's going to be right. Wow, very nicely, very nice approach. Let's say something's going to be right. What is the what is the bottom line as you look at this? Oftentimes, it's a level of exposure. I always say it's not a question as to whether or not you will make money. It's a question of how much, right? Behind all of these considerations, we've got side screens with what? MACD, literally, and momentum. So we're able to gauge the price action. So if I can zone in on one specific level of, let's just say one specific level of relevance immediately that is in play on an open, I want to hit it. Yesterday, what did we get? Let's rewind and just remember this. Watching the price action is fine, but let's revisit this very importantly. Yesterday, within the first minute, we had a 0.5% move. True? Yes, in the market that we identified. Today, on the open immediately, we had what? A 0.5% move immediately. Tesla front running what? NVDA, right? The opportunities therein. Can you schedule that in terms of the opportunities that were provided you immediately? Now, yes, we've had a bit of an additional run here on Tesla, 1.78% to the upside. It's got to keep up with Bitcoin, bottom line. About to come into some relative short areas here, at least for a potential flash trade. Let's zoom in and look at what Tesla is doing on the specific. Now, what I'm interested in here is what? You may say, well, there's too much going on. There's just too much going on. Well, after you held the 20 moving average on the 5 minute, what are you completing to? Target to the upside. What just got hit? Standard deviation to the upside. Who engaged? Bears, right? Boom, to target, bam. And doing what? Engaging. Now, the degree of flex, the degree of opportunity right now on this is compromised by your ability to do what? By your ability, I'll tell you, to get in, get out on a high frequency level. Yes, immediately. Last 2 days, we've had a 0.5% move, without a doubt. Hey, Tony, good morning from Australia. Hey, my man, Tony, good to see you, Tony. And I see Venus in the house as well. Nice to see both of you. Very, very, very nice, guys. We have such a tight group. I just really appreciate the guys. Everybody's looking for the right room on the internet. We're locked down. We got it. We got it going on. It's really nice to have you here. Tony, welcome. Land down under. In terms of Venus, welcome as well. So nice to see both of you. And Venus, I know that you traded CPI. Congratulations. Tesla continues to impress. Now, this is the issue. This is the issue. As we were to talk about the specific levels, or let's say the specific, what are we going through? We're going through a bit of not just the basic strategy here. What paid along on what? On the 15 minute on Tesla. I may have said 5, but I said 5 minute. Correction. We are on the 15 minute. Due to the placement, I had rearranged the 5 and the 15. That's an issue. I can try and do this to further elucidate or give a bit more in terms of the specific time frame for you visually. The most important thing, please lay out your time frames. And this is only one screen. Guys, we're streaming. I've only got room for one screen to go over the basics, the fundamentals. Now, as we look at confluence in a situation like this, some bears are going to engage. I'm going to tell you guys, you can't turn a bear into a bull. You just can't. You can't turn a bull into a bear. You just can't. So you've got people here on a short line. It doesn't matter if you tell them they might really get wrecked on this short, on the golden short line on the 15 minute. Yeah, watch them pound in. Watch the bears pound in and try and make a trade right now out of the 0.2, 0.25 that we engaged at the specific golden short. Is it enough to trade? You bet it's enough to trade, right? Try and get someone who's trained in the 20 moving average over under Bollinger Band to completely ignore the 15 minute while it's going on. I'd say kind of a level 2 trade. Level 1 trade is that immediate flash trade. Bam, bam. Hot price action right off the open for New York. That's the action I'm attracted to. So let's say a second order of business is what? And this is aside from your managed futures. This is aside from your macro pattern trades. These are high frequency. You got it. In terms of the exact open, can I hit a trade in the first 5 to 10 seconds? Roll it. Can I also manage? And I can. And you can too. Can I also manage? Now, you're not going to stop the bears here. Boom, boom, flash trades, right? They're engaging again here. Now, if you're not in the bear camp on Tesla, I can't convince you or otherwise. Hey, it's a short opportunity. They got paid on this line. It's a tight trade. What is my favorite way of approaching the market? You got it. More capital, less risk in the market for a shorter period of time, and boom, boom, boom. That's my guys, if I have a CV in the market or a profile that I present, that's what it is. In terms of more cash, it doesn't mean you have to start there or end there. That's my style, high frequency trading. That level of trading, you can research that a bit with, and we'll look for an upside target here along with a parallel carry up. So you see the opportunities here. If you got long here in terms of over the 20, and let's just revisit a bit of the criticism here as well, so we can just discuss it. What is a bit of the criticism here would be that there's just too much going on. As you learn to see this better, as you learn to appreciate what is going on, okay, and you learn to assimilate it properly, okay, and by assimilate it properly, I don't mean that you're doing an improper job now, but it's going to be like, really, I'm going to say this. Let's go ahead and say this. In terms of the opportunity that this presents, what I would say is the following. If you could imagine a teacher, okay, a teacher who needs to go around the room. Nice pattern formation in Tesla in terms of those maybe additional stage trades that we could be in based on that increasing volatility on the 1 minute. Boom. You got it, guys. Nice bell, rock the bell, boom to the upside. As you look at this, it could be equivalent to a challenge of what? I'd say this, and this is another level of engagement here. Bulls getting paid 2.67% to the upside in terms of that nice action. Way to go, Tesla. We can zoom out and now look at any potential breakouts on a bit more of a macro basis for Tesla. And what did we get yesterday on Tesla? Again, bears held on to this 100%, guys. You're not going to get the bears off of what I said yesterday, which was what? Well, the bears yesterday heard, well, you're at your max probability on Tesla. You got it. You're at your max probability completion on Tesla. And what happened, guys? Literally max probability completion on Tesla. And what happened? We went down 2-some-odd% yesterday. So as you look at that issue, there are going to be some overriding trump cards that I'm going to have. No pun intended any which way, but there will be some trump cards that I have that are not my trump cards. They're the market trump cards, and they will reinforce some levels of engagement in the market like yesterday. And that's where it starts to look easy. Okay, it starts to look easy for the guy who's playing with the probabilities, literally playing with the probabilities to the point of 75, 85%, not a 51%, 55%. No, guys, a 51% probability trader, someone going around pounding their chest with a probability is this one's going to go up. I don't care if you have the probability. If you have 51% or 55%, I could care less. If you have 60%, honestly, I could care less. Your job is still way too hard. If you have 75 to 85% probability, oh yeah, now you're talking. If you have 75 to 85% probability, capiche, bingo, guys. I'm going to tell you, that guy's job looks easy. That guy gets to literally show the world how easy his trades are. And you won't find many people who say this. Respect that fact, that you're not going to find a lot of people who tell you this game is easy. Okay? At the 75 to 85% probability, seeing a nice short. Who's paying on Tesla right now? You got it. Upper pro line degree, near proximate hit into our specific cap line. Boom, boom. Okay, so, but most people are going to talk about how complicated it is, how sophisticated of an approach you have to have, and how many hours you have to pour into and delve into your career as a trader. That is trash. And how they're still learning. And I hate the people who say they're still learning. You know, they love trading because they still get to learn every day in the market. Forget about that, guys. Forget about it. What's the most important thing? If you can latch on to a 75 to 85% chance, Okay, and 80, up to it, guys, 85% chance on your trades. This is going to be easy. I'm telling you, it's going to look easy. Are you still going to lose? Without a doubt, right? The 15% chance, the 20% chance, and some of those may be bigger losses than you expect. The market may, in the instance of a short squeeze or otherwise, the market may really surprise. Say levels of open interest, et cetera, are hidden, or, I mean, guys, you have to understand the government reports things incorrectly and then all of a sudden decides to correct that information all the time. You don't think the market's ever mistakenly reported something? Do you trust every technical that you've had as we're watching the bears just engage on these levels of interest on the hourly? It's nice. So I want to encourage you of a few things. One, I want you to designate flash trades. Okay, high frequency flash trades. The last 2 days you had those on the market open. I want to make sure that you understand that this level of approach is required. I'm going to tell you, if you're trading the open, it's required, and that you can do it. You can assimilate this information. I understand the critiques. I understand it. Well, there's too much going on. There's not too much going on right now in terms of interactions, levels, okay, of immediate interaction. There's not too much going on if we were to look at this right here. Boom, boom. You guys are just, guys, solid in terms of the specific increasing volatility. What don't I care about on Tesla? This specific area right here. I don't care about that. I want to hit 1, 2, 3, 4, 5, 6. Beautiful. Boom. Nice. Rock the bell. Okay. Now we focus on these. We could exclusively focus on them. Why? Levels of probability. The guy who's trading these and learns how to apportion his capital realizes it is not much of a question as to whether or not you're going to make money. It's just a question of how much, without a doubt. What are you seeing on the 1 minute? Starting to see the MACD RSI is folding over. You see that in terms of the cap line. MACD RSI and stochastic is folding over here in terms of that red line representation. What does it turn into? A target. Turns into a target. Be careful on the 1 minute. Your spread, difference between the bid and the ask, right? How effectively you're going to be able to negotiate in and out of a position. Essentially, the percentage that you're going to get of a move on the 1 minute is less. Okay, so what I'm encouraging you is that this doesn't have to be difficult. Okay, immediate level of just looking at this, it's just obvious. If you're trading NVDA, it's obvious. You can look at this. You may need to zoom your screen in, but you can take this information in. Look at this. What's immediately relevant? Huh? What's immediately relevant here? Okay. Well, and if you can see what's immediately relevant right now, I'm going to tell you, you can project what's going to be relevant in a few moments. Okay. That is going to be part of the experience. Okay. That's going to be the experience factor. As we work into lower time frames, into higher time frames, okay, you're going to have a different approach in terms of your spread. Again, the percentage which you think something's going to move. Right? But what's immediately relevant? Look at this hourly. You see the hourly? Without a doubt, the hourly 20 moving averages is holding right now. And where are we at? We're at the 15-minute open just above. Again, bulls are going to do what? They're going to push. Okay? They're literally here and going to push. Okay? Now, mind you, you're on the 15-minute. Boom, 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 boom. You're right at, what are you right at? 20.25. 0.25, flashing up from this specific attraction level to the bulls. 0.25, 0.28, boom, boom. Now you may say, oh, I just can't make any money on this. It's too tight. I can't do it. You will get more proficient in terms of your entries, your tight stop losses, and the speed at which you can specifically execute these trades to where you're either going to, and also learn along there with categorizing them as a high frequency trade. Boom, boom. How long did this one take? How long did this just take from the time that you just watched this? Boom, entry attracting bulls up and over, right? That specific 20 moving average on the 15. Guaranteed to go? No, not guaranteed to go. But look at it, it is going, guys. It is going. And what are we dealing with here? We're dealing with come on, guys, what are we dealing with here? What's this 20 moving average? Crossover. You got it, all right? So you've got a frequency potential. You've got a crossover potential. And as you trade these more, you're going to get to the point where this becomes just second nature, okay? Just becomes second nature. Now, this is NVIDIA, 15-minute. Nice to see a little bit of action up and over the 15-minute. Nicely done. I may increase the background here so that you can see this a little bit better in terms of NVIDIA or otherwise. What's important is you recognize nice completion. Do you think nice completion? What also acted as a level of resistance? That topside band, that target, boom, boom. You can't. So as we this is the benefit, and don't let it turn into a nice hit into probably a pushed specific ice cold short on that lower time frame, the 3 minute. Now check in with Bitcoin just a second here. Nice action on Bitcoin, and where are we at on Bitcoin? What I'll say this is, don't use your advantage and categorize it as a deficit. Don't do that. Okay, don't do that, because what is the fact of the matter? The fact of the matter is you would request, you would ask for, you would design and develop and try and bring in all these different time frames and all these different levels. You would. So as soon as you start saying that, well, it's just too much information, you're on the wrong end of the spectrum, and you know that. The good, I guess, say the good part of this is that they're not to your detriment; they're to your benefit. Okay, and yes, we need to distinguish the flash trades on open. Okay, let's say from another category of trade, we could even say, and I'd prefer this to be kind of a mid to, and say by mid, 15 minute to 1 hourly, 15 minute to hourly, depending upon the degree of volatility, but a discussion as to like a crossover trade, micro patterning versus macro patterning. Okay, and if we get into real macro patterning, what, for instance, on the 4 hourly is pushing Bitcoin? What's pushing, as we see just the hang up here along this specific top pro line on Bitcoin? How many times does the top pro line engage on Bitcoin? Frequently. What types of patterns are involved in this that would give us an expectation? We like the expectation of a broadening bottom. Can it fail? Of course it can fail. And if you're looking for that 90%, I'll tell you, if you're looking for the 90% and it's not listed to you empirically by, let's say, Bulkowski, okay, who's the authority on empirical data, we can say that. But in terms of this broadening bottom, you have these specific, I'd say, probabilities in the back in terms of the guys, this pattern. This is something that we like. And this is not something that is altogether unfamiliar in terms of the recent price action of Bitcoin. It would operate to a surprise if this were to just collapse. Okay, we have a majority of these specific broadening bottom patterns that have operated well. You know that. It was an important catch on that daily is the bottom line, 6% price action, and you see essentially you see where we're at from that point. So let's see if there's, now we can dig into the micro if you guys choose. Let's go ahead and look into NVDA just a bit more. See if there's any change as of right now. I'm seeing the 4 hourly cap line here as potentially instrumental in terms of a near hit on that cap line. There are shorts waiting, right? There are shorts waiting. And this is the point in time, in about 20 minutes into the game, really before this point in time, but I wanted to do what, guys? I really wanted to get into some more pattern dynamics, right? I really would have liked to have gotten into some more pattern dynamics beforehand. Say that's sitting on a side screen. You guys got that. Now, will the specific, please pay attention, will the RSI stochastic and MACD, that red line transferred from blue, meaning bullish, to red, that's RSI stochastic and MACD, settled in within our specific, what, guys, within our specific Bollinger Bands. Just a way, you can use ATR, you can use Bollinger Bands, guys, standard deviation, just a measure of how much, how far away are we from our average, guys? Give us some sort of measurement away from our average, right? Are bulls overperforming, or are they not showing up? Are bears overperforming, or are they not showing up? When we see this red, it means something to us in VIP, without a doubt. What becomes relevant? The specific 20 moving average. Absolutely, kind of a warning flare that we have got the specific potential to contact that 20 moving average. One of two things can happen. The specific price can come down to the 20 moving average, or we know what can happen. Well, the 20 moving average can also come up to price. So if you're looking for, I want to finish this thought, the specific, and let me finish this one while I'm at it. Does it necessarily mean that we're going to break the 20 moving average? That is a question of backtesting. That's a big question as well in terms of where is your actual, if you're going to look at the specific frequency, at the specific cyclical action of, as we look at Tesla, looking at the specific cyclical action here, you're going to run into some specific, I'd say, categorically relevant levels here on your cap line that are not only tied to other time frames, but also that are going to express different probabilities depending upon where you turn red. Is it within a high? And if we look at this, guys, these are essentially volatility scores. So the higher level of volatility that's been reached, we have a greater probability of heading down below the 20 moving average. If you know how to read your volatility here, the volatility is the following, is what? The volatility is the specific 20 moving average is our baseline. I can change this to whatever line I want to, but it's confluent with the popular 20 moving average. Guys, we could use the 5, the 20, the 4, the 9, the 18, the 21, the 50. Guys, you name it, the 100, the 200, we can get into all those details in terms of what we choose. The 20 is just the most generic, out of the box. It's a very popularized guys, level of consideration, that 20 moving average. Now, who got paid and who had some strong hands here? You got it, huh? Bears got paid with some strong hands. There you go, 1 point. And guys, aside from this inclination that, well, everything has to be in and out, I don't want you to get trained to where everything has to be an in and out. So distinguish between the opportunities flash trades, because we've seen 2 of those. Okay, 2 of those last 2 days, boom, on the market open. But here's one where the bears engaged at the top pro line, engaged at the specific cap line, and boom. Now, bulls, a little frustrated here, a little bit unhappy, right, in terms of not really reaching that top side level of resistance, not reaching it. What did we run into? As a matter of fact, what became relevant was the hourly. You got to say, guys, the hourly cap line, the hourly pro line. The pro line is a calculative. It's a kernel calculative. Will it engage every time? No. Does it have a probability, a significance in terms of the level or degree of engagement? You bet it does, right? So as we would look at, let's dig in a little bit. And this again, you have this on your side screens. I do too, but I can only show you, guys, I can only show you something at one, right? Essentially one screen at a time without flipping through too much. So we're seeing a bit of a give back on Tesla. Looking at, and here we go, in terms of NVDA, and I want to reinforce today the following. This has just been on my mind. I want to reinforce it. If it seems like there's too much going on, there's not too much going on right now. That's the bottom line. There's not too much going on right now for you to trade. Need to learn to identify what is a point of relevance. What is a point of relevance between the 15-minute? Well, we didn't stop at the 20 moving average. We didn't. We stopped right here on the specific, which is flashing red and blue. Nice to see that the stochastic MACD RSI line, which is that blue to red. And if you'll lay this out, if you appreciate the cap line and if you used it and traded with it, you get it. You got it. There's a level of relevance, guys, an important level that's incoming, that's going to affect, has a probability of affecting price. But when you get into this, what's nice is you'll see, okay, so the 20 moving average doesn't pick up. This is within proximity below. Will it be a judgment call based upon your understanding of price action, et cetera, as to, well, I've been working with this cap line last number of days, and the cap line's receiving some really nice action on this 15-minute chart for NVIDIA. Look at this level here, boom, boom. Now, this could be in flux as it's interacting, but I see, and I respect, let's say you as a trader, I'm respecting that cap line, that RSI, MACD, and stochastic, a little bit more, along with maybe even your fire and ice, that kernel calculative, more so than the 20 moving average. If there, you may play a little more conservatively. If there is an opportunity to pick up lower, I want to try and pick up on the specific cap line below, right? You may get to where that is your preference. In terms of the dynamics, understand and categorize. What I'll say is this, not just flash trades, but as you assimilate into, I don't want it to be overcomplicated, guys. You got it, right? I mean, you get it, right? Maybe the worst thing to say, are you sure? But the screens are not that complicated. In terms of the activation levels, if we call them activation levels, the specifics are this, and let's just review. We have on the screen for an open, we have a 20 moving average. In pink, we have a specific, and I'll lay this out as such. We have a 20 moving average. Okay, let's clean this up completely. You see the 20 moving average, no problem. You want a cap line? Do you want to see where price is interacting exactly based on volatility on the RSI, stochastic, and MACD? Perfect, let's see that. Boom, RSI, stochastic, and MACD. Do you see the specific kernel calculative that likes to interact with some really specific, and this is just one time frame, some really specific nice hits? You see this? Some specified nice hits, levels of interaction, boom. If you see this and assess it, and I can say, okay, I can give this to you, this is on the 15-minute, I can give it to you on every time frame. So the other levels that are hit are most likely hitting on another time frame. Does that become relevant for you? Hugely relevant. So that would be that cap line, that RSI stochastic MACD. And let's lay back over the tried, tested, and true. Just, guys, it's a fundamental technical analysis as recognized by New York Institute of Finance, that Bollinger Band. So it's not too much. If you would prefer one over the other, rock and roll with it. Absolutely. As you would look at the guys, fire and ice, you could do away with everything, honestly, and many do, and just trade fire and ice. You could. It's dynamically deployed and calculated. You'll get some shifting around, but when it's a dead-on ringer, it's a dead-on ringer, like the recent bottom of Bitcoin. I encourage you guys to work with and complete your 100 rounds. What is 100 rounds? You understand it's light exposure in the market until you become proficient and consecutively are booking trades. Very light exposure, not paper trading. We don't paper trade. That's the bottom line, guys. Give yourself some sort of a stake, even a light one, to where you care about it. You'll find yourself surprised with how much you do care about even a light trade. Now, NVIDIA, what is the biggest problem we have for NVIDIA right now? I want you to look at the 4 hourly and the cap line. That's the biggest challenge for bulls. Look at the specific daily. What are we underneath the 20 moving average? Just be aware, okay? And then what's the question? Do I have any upside targets? Do I have any upside targets in terms of if I'm heading or focusing or looking down? That would be the bottom side band I'd be looking at to evaluate what are my hurdles to get there. Okay, what are my hurdles to get there? Looks like we have a nice gap right there, guys. You got it. Okay, so there's some other issues that we would deploy exactly what we've been discussing in terms of cap line, in terms of kernel calculatives, in terms of the specific Bollinger Bands as well on the other time frames to dig into. And this is where I look at it. It's been 30 minutes. We've had some trade ops. We call them ops, meaning opportunity. You just can't, once you get settled in with this, you cannot miss the levels of relevance. You just can't miss these levels of relevance. What does this tell me that's going on here in the 30-minute? What do you see in the candles in terms of patterning? Anyone see anything in terms of the candle patterning right now on the 30-minute? Yes, you do. Okay, let's look at NVIDIA. Let's dig into, and I want to change this here. Okay, so NVIDIA's got a bit of a bull flag here, okay? With what? Okay, NVIDIA's got a bull flag. You'll get better at the pattern recognition. Don't worry about it, I promise. Okay, in terms of the bull flag going on with NVIDIA, recontact on the 30-minute, 20 moving average. It may take you a while to where you can just see that on the candle wicks, okay? It may take a while, guys, because it's not overly relevant. Let's just say this. In terms of that, what else can we drill into and try and determine here as to whether or not there's an increase level of volatility that we could participate with? Let's take a look at the 5-minute real quickly. Anytime I see expanding volatility, boom. The flag is a more difficult call. But anytime I see a more, let's say, an expanding level of volatility, what am I prepared for? If I'm a bull, what do I get excited about? This down here, please. Give me this down here. Why? Because we have an expectation as long as what? As long as I can keep this, and there we go, as long as I can keep this specific level of resistance descending, as long as I can keep this level of resistance descending, and mind the contrary, like we've fallen into the 30-minute kind of wash out mentally with the market that we receive some good volatility, then she wants to get people she wants to get the traders really analyzing things, right? But as we look at this, bulls are prepared to operate where? And we take into fact and consideration that NVIDIA has been a little difficult on specific, guys, expanding volatility patterns for bulls, a bit difficult, without a doubt. Looking at that level of support, prepared to operate on level of support and below. And this, again, is just kind of the introduction, just the introduction into, I'd say that kind of the second order of business after the open. What does the day look like, right? What are the popularized patterns that the traders just couldn't miss right now that are in the works? Now, what do we see here as well? On the specific 30-minute, we're seeing the classic specific wedge to flag dynamic. The wedge fall out to the specific bull flag dynamic. Do you guys remember this pattern? In terms of the specific wedge formation. Yes, okay, that specific move up, symmetrical triangulation. We know on the pour down, what are we likely to see? Specific bull flag. We are Guys, we're very familiar with such a progression in the specific in those specific let's say the chart, kind of the evolution of the pattern framework. So volatility, we'd like to see the drop. What is that in line with? That would be in line with a drop potentially further down to the green buy line on the daily. Would be amazing. We've got the 4 hourly in between that level, but as we look for excuses to go down, that wouldn't be just absolutely unwelcome by the bulls. Why would we want to? And that's what we're assessing right now to get down through here. That was the discussion that we were in terms of the target to the downside. What are the hurdles to getting there? Now we're looking at what would be one of the benefits of getting there. So if we can get down to this lower target or thereabouts, we've just explored what one of the recoup moves would be, technically based on probabilities. You got it. And what would be the assessment in terms of a risk function that we would want to deploy here? We would want to look at always when you find a micro, remember we dug down into the micro in terms of that volatility expression, we want to know if we're a part of any larger, pay attention, we want to know if we're a part of any larger volatility equation, which could operate to the surprise of anyone who is overexposed in this micro area, because the market will specialize in getting you all trapped into a small little pattern which looks as big as your TV. It just does. You've stared at it long enough and there's this big of a pattern, and then you'll zoom out and you'll realize you just got absolutely Shaquille O'Neal'd, boom, down to, you guys know, just, it'll be a big move. Just don't let yourself participate in anything without the larger spectrum. I call this a larger viewpoint, just, kind of an eagle eye approach. And I mean, just like telemetry from literally just zoomed out as much as you can. That's just that is, I'd say, the safer way to participate, and understand that you've got probabilities with you, but that specific, the exceptions to those higher probabilities can definitely hurt if you're overexposed in the market. So enjoy the market and enjoy your gains in the market. That's the name of the game. Looking at this, you see things slowing down, right? Absolutely. Tesla again, engaged and waiting. So we've got some time to go in the back, wait to trade on the open. Without a doubt. 3 minute looks a little relevant right now, right? You know the procedure, right? We have levels of pickup here. Absolutely. We have flash trades, which are going a little bit slower now that the heat of the market open has digressed a bit, right? So we got some nice shorts. We saw some golden shorts engage. We saw some top pro lines engage. We saw some completions this morning in terms of that over the 20 moving average, some nice completions. And I'll just say this, I try to not speak too quickly. I try to relax and enjoy the market as well as I plug back into Bitcoin, what's relevant immediately. And you'll be able, it's like a flashcard, guys. You'll get better at this, but if you can look at these like flashcards, okay? If you were to look at these and someone were to present these and put them all in front of you, okay? And understand, just like you would learn flashcards, you would have 8 flashcards in front of you, and you'll know where price is, the specific dotted line right here, okay? And you're going to be able to pick out of the flashcard deck immediately after spending time with the deck, immediately, and they're going to be variable. That's the good part, okay? But as you look at this, if this is a flashcard setup here, you're immediately going to be able to pick out the most relevant in terms of an absolute solution here, in terms of, well, this is too complicated. There's too much going on. No, you're going to be able to get to the point where you immediately identify the specific flashcard that's most relevant, the time frame that's most relevant. Yes. And then you'll be able to identify what? Immediately therewith, bull, bear. Yes. You're going to identify immediately along there with what? Probably the next most relevant flashcards. The next most relevant, you stack 1, 2, 3, and we throw 8 of these at you, and you're gonna say, no, I need this, this, and that. Okay, it's gonna take you maybe, guys, maybe 3 or 4 seconds to do that. It's just a matter of practice. You remember when you used to go through flashcards, and in the beginning, you would spend an hour looking at these flashcards and turning it over, learning what it was, and then you get to the point you're just flying through them. If you have kids that use flashcards now, you're like, wow, you're really making it through that information. That's the same way these time frames are. What's the relevance? We put 8 flashcards. What's the right answer? Boom, this one, okay? And what's the next level of relevance here on the market? I need this one, and that one, whichever one it may be, right? So try and approach it a little bit like that. Spend some more time with this process, and as we continue to engage with the guys behind that selection of whatever flashcard or time frame, along with the directional implications, the hurdles or the benefits to getting there. Do we have a free and clear, right, on a pattern completion target? Do we have hurdles to get there? You're going to be able to strategize. This is part of enjoying the market. I look forward to seeing guys, you just develop into the market. It's exciting in 2023. We're rocking and rolling, and exciting to see Bitcoin kind of surprise everybody. Way to roll. And in terms of the market open, congratulations to traders that participated in CPI. Stay focused. Without a doubt, stay focused. And let's just take a quick look, if we can, to some other elements in play. Now, as I look at this on Bitcoin, I'm immediately impressed with the fact that we're just along that specific 20 moving average on the daily. That is part of that multiple moving average set that I provided to you all. And you'll see on the daily here, it's very interesting. On the daily, it looks like we're just up and over. Now, this is one thing, kind of a different set of flashcards, why you need those side screens with patterning. See, we're up and over the 20 moving average. This is the daily. Now, we get a completely different look here. This is on the hourly. So on the hourly, I still have that 20 moving average from the daily. Now, this is a little bit more sophisticated. Not everyone's going to just read through this and understand it. You've got a 20 moving average on the Bollinger Band here, but you see the level of relevance here on the hourly. That specific blue line is part of that moving average multi-pack that I provided you guys. And I deselect all of them, guys, except the bigger time frames, the daily, the weekly, and the monthly. I want to see where those are. So this is another opportunity to kind of distill through and sophisticate your approach to the market. And guys, if you didn't have it like this, I wouldn't be going through this stuff. Without a doubt. If you didn't have it like this, I wouldn't be going through this information. Without a doubt. So nice to know you got it like that. And then I can talk, have some nice discussions with all of you. In terms of NVIDIA, nice to see a little bit of a clearer image here. It's nice, maybe too clear. Will it encourage you just to go short no matter what here on the specific daily on NVIDIA? Maybe. Do you want to include the technicals multi-time frame and the hurdles and to go through this kind of selection and evaluation process? Absolutely. Absolutely. Without a doubt. So you'll have your charts set up. You will be able to participate in the market as you choose, and it'll be a refinement process as you continue to do that. Nice call yesterday in terms of the 50% max probability. Beautifully well done. Very nicely well done. Now, what don't I have on this chart that immediately I'm missing? Where's my cap line? Right? Now, where's my cap line? I have fusion on below here, which is going to tell me essentially what my cap line's doing. This rounding here, this is my cap line on our fusion, okay? But what am I missing? It's not on my specific chart. I want to know where's my cap line on my specific chart. Why? Because it's a level of potential resistance, right? So I can flip back to the other, the specific other chart if I so choose. I can try and bring it in real quickly. Let me try and bring this in real quickly if I can. Let me try and bring it in. Sorry if my audio is going a bit. And so, guys, very apologetic in terms of the, I'll just say in terms, let me pull this over here. In terms of yesterday's sound glitch, my fault. I won't blame it on Rode Microphone. I'm sure they're a great company. We just have problems with their products. What I'm looking at here, now I've got that RSI MACD stochastic. You see how even the simpler is better to a point, and then you want to know, well, hold on, where is my level of engagement potentially upon here? And that's what I was missing. That's on the hourly. If I take all the drawings off, if I completely clarify, I see yes. That's what I was missing on this chart on the specific hourly, that engagement, boom, into our cap line. That's what I wanted to see, along with what? From knowing the other charts, along with that, and we can flip on here, the specifics of Fire and Ice, that top row line. So it'll be a balance, it'll be a bit of a journey, but you guys, again, I wouldn't throw it at you if you didn't have it like this, and you can rest assured on that. It's nice to have you all guys around me in 2023. It's a blessing. I hope you're having a great day. Enjoyed CPI, enjoyed the open. This is London with Bitcoin Spike and VIP Trader. Let's go get them. We'll talk to you soon. Take care. Bye-bye.